Pantheon AI presents Trump's AI action plan, incoming. Lockheed misses $1.6 billion. Bitcoin jumps. Good morning, everyone. Welcome back to the PAI Morning Briefing. I'm your host from Pantheon AI, and today is Tuesday, July 22nd, 2025.
And I'm Sarah. John, it's great to be back diving into the world of finance and markets with you. Sounds like we've got quite an exciting day ahead, huh?
Absolutely, Sarah. We really do. So grab your coffee or tea, settle in, and let's jump right into our market overview. Let's start with a quick look at our major indexes. The S&P 500 closed at roughly 6,293, a modest decline of about 0.21%.
A slight dip for the S&P. What about the Dow then?
Well, the Dow Jones actually recorded a slight uptick, finishing the session at approximately 44,429, moving up by nearly 0.2%. But over at the Nasdaq, our tech-heavy index, it slumped by around 0.82% to finish at just over 20,809.
So a bit of a mixed bag there. But interesting to see the Dow up when S&P and Nasdaq were down. And the Russell 2000, which many of our listeners watch for small cap insights. How did that fare?
Good question. The Russell 2000 actually ended the session higher, gaining roughly 0.29% to settle around 2,238. So, bit of a bright spot there.
That's good to hear. Now, shifting gears a bit, what's happening in the crypto world? Always a wild ride there.
Indeed. Bitcoin is actually having a relatively solid day, with prices climbing to nearly $119,000, an increase of roughly 1.3%. However, Ethereum saw a decline of around 2.5%, settling close to $3,668.
Wow, those are some significant fluctuations, even for crypto. It really underscores, doesn't it, how these movements, even if they seem routine, are such important indicators of risk sentiment and market liquidity, especially as we see investor behaviors evolving in both traditional and digital asset spaces.
Absolutely, Sarah. It's that constant evolution. Now, let's transition into a deeper discussion on some major market trends. First off, a headline making significant noise today revolves around the Trump administration's upcoming AI action plan.
Oh, right. I saw that. It's in conjunction with a presidential speech on Wednesday, isn't it? So what's the market's take on this?
Exactly. Market participants are eagerly eyeing a potential boost for select stocks that stand to benefit from the administration's focus on artificial intelligence. The synergy between politics and market movements becomes crystal clear here, as investors are really trying to anticipate which sectors and companies might capture the windfall from federal initiatives.
That's a huge point, John. Government policy can radically shift market dynamics overnight. This initiative could open up new avenues for companies in tech, defense, and manufacturing to secure government contracts or leverage public-private partnerships. It's fascinating how quickly things can change with a policy push.
It really is. And speaking of the defense sector, our next story is no less dramatic. Lockheed Martin stock has been making headlines after reporting a significant profit miss.
A profit miss from Lockheed? That's a big deal. What happened there?
They took a massive charge of $1.6 billion. Primarily due to issues linked to its classified programs. For an industry giant like Lockheed Martin, such a hefty charge is not taken lightly. It raises real concerns among investors regarding the sustainability of its profit margins and the potential impact on future cash flows.
Wow, that's a huge hit. It just goes to show, doesn't it, that even industry stalwarts aren't immune to operational challenges or unforeseen setbacks. It begs the question, though, will this develop into a more systemic issue? Or is it merely a temporary blip caused by their handling of these classified projects?
That's the million-dollar question investors are pondering, trying to balance their enthusiasm for defense spending with caution over short-term earnings volatility. Now, in currency news, another interesting development is with the USDJPY pair.
Ah, the old USDJPY. What's it doing now?
It's been on a downward spiral, testing a critical technical level. The 38.2% retracement from the rally observed between the 1st of July and the high last week. With that retracement level sitting at approximately $146.7, the recent drop to nearly that figure has really caught the attention of Forex traders everywhere.
So these technical levels are pivotal for Forex traders, providing potential entry or exit points, right? It really opens up that broader discussion about the divergence between technical analysis and macroeconomic fundamentals in today's ever-changing market landscape.
Exactly. It's a constant dance between the two. Let's dig deeper into some additional headline stories surging through our newswires. Jim Cramer, for example, has wrapped up his top 10 things to watch in the stock market for Tuesday.
Oh, Cramer! Always a lively list. Any big names on there that caught your eye?
He's throwing the spotlight on companies like Coca-Cola and General Motors, among others, both of which reportedly beat earnings estimates. Now, whether you're a believer in the bright lights of Wall Street or a more cautious investor, there's a lingering question about how sustained earnings beats will shape investor sentiment amidst other uncertainties in the broader market.
That's true. It's never just about the earnings beat, is it? On the business front, we're also seeing companies wrestling with strategic expenditure decisions. There are several reports indicating that corporations are cautiously spending on business travel, a sector continuously impacted by global trade tensions and uncertainty.
That cautiousness in corporate spending is a telling sign. Even as the economy shows signs of recovery in some areas, businesses remain wary of potential disruptions from international trade policies or sudden shifts in global economic outlooks. Every dollar spent on travel is scrutinized for maximum ROI.
Absolutely. And in another fascinating development, Warren Buffett has actually addressed rumors circulating in the market. Reports had suggested that Berkshire Hathaway's BNSF was engaging Goldman Sachs for a potential railroad takeover.
Yes, but the legendary investor knocked down these reports quite decisively in his conversation on CNBC, emphasizing that neither he nor his partner, Greg Abel, had heard of any discussions with Goldman Sachs. His clear stance not only quells speculations, but also sends a reminder about the crucial role of transparency in markets.
That's a great point. For investors, that real-time correction is a helpful indicator of how quickly misinformation can circulate and the importance of verifying claims through trusted sources. Speaking of Coca-Cola, another headline involves them, John. They've confirmed a new version of their cola, featuring real cane sugar, is on the way.
Right, and strangely, even as this innovation is expected to win back nostalgic consumers, Coca-Cola's stock has actually fallen. The fall in share price seems paradoxical against the backdrop of a hopeful product launch, even mentioned by President Trump.
It really does. This scenario adds an interesting layer to our discussion on consumer evaluative metrics. While innovation is generally seen as positive, the immediate market reaction can be driven by broader financial metrics or even profit warnings from previous quarters. It raises that ongoing debate. Does market sentiment react more to immediate earnings reports or long-term strategic shifts?
A classic market dilemma, but let's talk about a real success story now. Yeti. Their stock performance has been soaring.
Oh, I know all about that, John. Their latest hit, the Camino Carryall Tote, has created a massive buzz on social media platforms like TikTok. It's sold out in numerous vibrant hues. It's gone viral.
It's incredible. Analysts have taken note, suggesting this is a clear sign of the company's successful brand expansion strategy. When a trendy tote bag can drive a rally in stock prices, it's not only an affirmation of clever marketing, but also a reflection of shifting consumer behaviors, especially among younger, social media-influenced audiences.
It truly is. It's fascinating to watch. Now, in logistics and transportation news, Hub Group has announced plans to expand its temperature-controlled intermodal service offering through the acquisition of Martin Transport Intermodal.
That's a smart move. This signals a strategic expansion into more specialized transport services, which is a win for sectors like pharmaceuticals and fresh produce that rely on maintaining precise temperature conditions during shipping. It underscores how companies are adapting to capitalize on critical service niches in the supply chain.
Definitely. And on the real estate and industrial front, BLP has snapped up a newly constructed, fully leased industrial portfolio comprising approximately 332,000 square feet of Class A property in the Inland Empire West.
That's a significant acquisition. It positions BLP to tap into high-barrier gateway markets with significant potential for long-term growth and stability in the industrial sector. Industrial real estate remains a robust asset class, providing a counterpoint to the more volatile swings we see in tech or digital currencies.
Absolutely. Now let's take a moment to shift our attention to a more granular sector analysis, dissecting trends affecting technology, energy, and finance. What are you seeing in tech, especially with this AI action plan looming?
Well, the looming introduction of the AI action plan by the Trump administration is certainly stirring up discussions among investors. The confluence of artificial intelligence and federal policy can be a game changer, creating both opportunities and challenges. Companies poised to benefit include those involved in advanced manufacturing, cybersecurity, and data analytics.
That's really promising, but I imagine it also unearths concerns of increased regulatory oversight and potential market distortions if policies swing too far in favor of certain groups, right?
Precisely. It's analogous to a dramatic plot twist in your favorite thriller. Just when you think you know where the story is headed, a new twist appears. Within the energy sector, even though the news today is less focused on oil or renewable energy specifics, we still observe subtle undercurrents.
Energy is always critical, underpinning everything from manufacturing to technology infrastructure. With ongoing geopolitical tensions and shifting global supply chains, companies in the energy sector are doing a real balancing act between exploiting traditional fossil fuels and transitioning to greener alternatives.
It's a huge question for investors. Which energy players are best positioned not just for the next quarter, but for the coming decades in this transformative era? It's a reminder that while short-term market fluctuations can create nervous moments, long-term strategic shifts have the potential to redefine entire sectors.
That's so true. And turning our attention to the financial sector, much of today's market sensitivity can be traced back to ever-changing macroeconomic policies and the interplay between fiscal stimuli and regulatory measures.
Exactly. The Lockheed Martin profit miss, the cautious corporate travel spending, and even the rumors regarding Berkshire Hathaway all have broader implications for how investors perceive risk and stability in financial markets. The interplay of these elements, technology, energy, and finance, creates a truly dynamic environment where each sector influences the other.
It's a complex web, isn't it? As investors, we find ourselves asking how emerging policy shifts, particularly around AI and technology, could ripple through to influence financial strategies and risk appetite. It's this interplay that keeps our daily analyses so exciting.
It really does. Now let's consider the global market implications of these developments. In today's interconnected world, moves by key players like the United States have ramifications that extend far beyond domestic borders. The retracement in the USDJPY pair, for example, is not just a technical anomaly. It could signal wider currency adjustments that impact emerging markets and international trade flows.
Right. Investors in Europe and Asia will be closely monitoring such movements as they adjust their forecasts for global trade volumes and central bank policies. Similarly, the federal push into advanced technology sectors through initiatives like the AI Action Plan could recalibrate tech investments internationally, impacting emerging markets that either supply critical components or benefit from downstream innovations.
And political uncertainty continues to cast its shadow over global markets. The cautious corporate spending on business travel driven by trading uncertainties is a reminder that international relations and trade policies remain hot topics. As investors, you're prompted to ask, how will ongoing tensions shape not only currency values, but the broader sentiment in cross-border commerce and industry?
Those are valid questions, and the answers lie in how governments, central banks, and corporations navigate this complex global environment. We've covered a lot of ground so far, John, and now it's time to move into some expert insights and predictions.
One key takeaway is that geopolitical risks and regulatory shifts, whether spurred by defense challenges at companies like Lockheed Martin or innovations from Coca-Cola, will continue to create volatility in the near term. However, for savvy investors, these are also opportunities. Diversifying across sectors like technology, energy, and financial services might not only mitigate risk, but also capture growth from these very dynamics.
That's a great point. Reflecting on the Trump administration's anticipated rollout of the AI Action Plan, it's tempting to think of this as a pure catalyst for market disruption in the tech sector. Yet, as with any major policy initiative, the outcomes are far from guaranteed, are they?
Not at all. For some, this might signal a new era of innovation that could redefine industry standards. For others, it represents yet another factor contributing to short-term market jitters. My prediction? We'll see a period of adjustment as markets price in the potential benefits and risks. And yes, while tech companies could be the beneficiaries, other sectors, notably defense, energy, and even consumer goods, may also experience indirect impacts as supply chains and broader corporate strategies realign.
That's a really comprehensive view. You know, John, before we dive into some thought-provoking questions, let's take a brief moment to bring a bit of humor into our conversation. They say that financial markets are a bit like a roller coaster, right?
Absolutely, Sarah. Sometimes you're laughing all the way to the bank, and other times you're gripping the armrests for dear life. I like to think of this morning briefing as our moment to share a gentle jab at the wild nature of markets. Because if we can't laugh at ourselves, where will we find the humor during these unpredictable days?
So true. Whether it's a surprising earnings miss from Lockheed or a viral tote propelling Yeti stock, the market certainly never ceases to entertain us.
Never. Now, before we wrap up, let's touch upon a few more thought-provoking questions. With big policy initiatives like the forthcoming AI Action Plan, how much of today's market volatility can we attribute to regulatory risk versus genuine economic fundamentals?
That's a deep one. And when companies as established as Coca-Cola introduce seemingly nostalgic products, like Coke with cane sugar, is it a sign of a shift in consumer preferences, or simply a marketing maneuver to rekindle old loyalties? It's hard to tell sometimes, isn't it?
It really is. And similarly, with emerging narratives around corporate travel and balancing global trade uncertainties, how might shifts in these spending patterns redefine corporate budgeting in the coming years? These are some topics you may want to mull over as you prepare your investment strategies for the month ahead.
Excellent points to consider. So to summarize the key takeaways from our conversation today, we observed mixed signals in our major indexes, with modest declines in the S&P 500 and Nasdaq, contrasted by slight gains in the Dow Jones and Russell 2000.
And cryptocurrencies continued to demonstrate volatility, with Bitcoin climbing modestly and Ethereum experiencing a sharper decline. In major news, the Trump administration's planned AI policy is stirring expectations, while Lockheed Martin's significant profit miss and the technical levels in USDJPY are raising caution among investors.
Furthermore, intriguing corporate moves, including Coca-Cola's product innovation, Yeti's brand expansion through social media buzz, Hub Group's strategic acquisition, and BLP's investment in industrial real estate, indicate that while volatility remains, opportunities are plentiful for those willing to navigate the competitive market terrain.
As we reflect on all these stories, I encourage you to consider how each development might overlap in ways that can affect not just one sector, but the broader global economy. The interplay of technology, geopolitical risk, and evolving consumer trends creates an environment where strategic foresight becomes essential.
Whether you're an investor seeking growth or a trader mastering the daily swings, these trends remind you to stay informed, agile, and ready to pivot as market conditions evolve. And John, you always leave us with some great questions to ponder.
I tried to, Sarah. What are you anticipating from the Trump administration's AI policies? And how do you think they might reshape not only tech companies, but also traditional industries like defense and manufacturing? Can you see the ripple effects of corporate strategies, such as Coca-Cola's push towards its cane sugar version, on consumer sentiment and competitive positioning in the beverage industry?
And lastly, in a world where global currencies and trade remain as volatile as ever, what steps can you take to diversify and protect your investments against sudden market shifts? These are all things to keep in mind. And remember, our journey through market analysis is a continuous conversation.
Exactly. You can always ask questions to our AI co-pilot for further insights and clarity. I want to take a moment to give a shout out to Pantheon AI, your reliable information co-pilot through these dynamic market times. We continue to bring you detailed analyses and expert insights every single day so that you can make informed decisions. And as always, remember, learning shouldn't feel like a full-time job.
Well said, John. Thank you for joining us today for the PAI Morning Briefing. We look forward to our continued conversation tomorrow.
Until then, keep your eyes on the markets, stay curious, and keep questioning the narratives as they unfold. Have a wonderful day, and I'll see you back here for the next episode.
Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.